Welcome to the Brew from the Bahamas.
Yeah, man.
Bella Vita. Good to see everyone. Today we're going to talk about David Einhorn and the market is broken with Paulina from CNBC. I'm not even going to go further than that. Let's get started. What do you say? Bing. Do you want to know the bad news? I think I was on mute.
No.
What an intro.
Did you guys hear me?
Totally heard you.
Oh my God, so cool. I thought I was on mute, but I was mute when Max was playing the songs. I love the songs. Paulina, thanks for coming today. Friday again, because it's Friday. That's just all it is. So this dude, David Einhorn, I've got my researcher with me today on the boat in the Bahamas, and he's giving me a few cues. However, Paulina, Molly is going to go totally CT on you.
I just might.
All right, let's let Paulina tell us a little bit about this cat and what he's all about.
Definitely.
Yeah, I thought his comments around the market were interesting. So who is David Einhorn? So he is the president of GreenLight Capital. He manages about $7 billion in assets. And he recently came out in his first quarter shareholder client letter saying that he believes the market is fundamentally broken. This isn't something new. He has been talking about this since 2021. So essentially his argument is that investors today, they're not concerned with valuation, but they're more focused on price and how to get ahead of that. So that's essentially what his argument is, and I can break it down further, but that's kind of what he's saying is happening in the market right now.
So is it something to the effect that it seems like the fundamentals aren't there yet, the market's so resilient, keeps going up, and maybe there's a more of a passive investor sentiment among?
Yeah. Let me get into it a little bit more. So
okay.
Essentially, he's talking about how there's not enough money that's being dedicated to things that are trying to identify undervalued companies and reward those companies with capital that have good opportunities for growth. And he's also saying, to your point about passive investing, that index funds, they're buying these overvalued assets because they're betting on the biggest weight in the index. And overvalued companies, as a result, become more overvalued. And then as a result, there's a divergence in value. He's also saying that once you have, the largest shareholder in every major company that's being in a passive fund, shareholder activism becomes very difficult to improve. Corporate governance. He says that if you're a shareholder who's in one of these companies, it's going to be difficult for you to kind of have a say in what the company is doing. So yeah, that's kind of a breakdown of what he's saying.
What's the broken part? Just so I'm missing the broken part. So, Paulina, what do they mean? What does he mean by broken?
Yeah, by broken, he's saying that investors nowadays, they're not really concerned with valuation. They're more trading rather than being a value investor that's looking at the fundamental value of the company. They're trying to see, okay, what's the price of this stock going to be in a few hours from now, in a few days from now, or before it reports earnings, after it reports earnings, and how can I get ahead of that to make, a quick return? So the mindset is more, I want to say, short-term in nature versus a long-term investor, a value investor has assessed the fundamentals of a company, where they are right now, where they could be in 5, 10, 20 years from now, and they invest with that long-term mindset in mind. Okay. So that's where, the broken piece comes in.
I gotcha.
So where does he think the market is going, up or down? Or is it a soft or hard landing? Are we in for it?
So yeah, that's a good question. He said that this doesn't mean that you shouldn't be in the markets. Instead, you should try to be a true value investor. So think like Warren Buffett. He is the true value investor who has, very large stakes in iconic companies that deliver sustainable growth over time and have a fair valuation from when he started his investments in them. So that's kind of the mindset, kind of go back to basics, essentially.
Okay.
That's what he's advocating for.
So are you familiar with his investments? What sort of things is he purchasing or selling, for that matter, currently?
Yeah, so he's investing in a variety of different companies. You can see his full portfolio, his 13F filings, and he has all of his investments. But more recently, he's invested in a company called Solvay. It's a chemical company based in Europe. He owns 5% of the company, and he likes it because it's a spinoff that looks like it's miscalculated. So he thinks that obviously over time it can go higher. He also has a stake in Penn Entertainment, which is the regional casino operator. He likes it for the sports gambling, and he thinks there's opportunity for the company to do better. Mm-hmm. And then he has a couple small positions in other companies, like this one called Roivant Sciences. It's a biotech company that's focused on autoimmune diseases. Another one is a telecommunications company called Liberty Global, and that has operations throughout Europe. So he's in different sectors, and he's taking a valuation play on all of them, it seems like.
Okay.
That's really, this is so good to hear. This is my whole shtick, is fundamental trading. So really looking at the value behind companies and what do they have under the hood. And I think Cathie Woods has been a great proponent of that. She, in her early entry into Tesla, and then it took a dive. She received a bit of a mouth from the public on that one, but it pays off. So, I wanted to just point this great Run More Capital did a back test from the 70s, and they showed that anytime that the PE ratio on the S&P is 25 to 27, you have a maybe chance of making anything in the market. Anytime it goes from 27 and above, then there's just no chance. And so, one, this is a great opportunity of options trading. So, but I do think there's a bit of a fear mongering. We have the potential World War III, we have potential, rate hikes, and we have potential, aliens are coming, the Pentagon has been having these meetings. And so everything to distract us from zooming out, like he's saying, which you bring up a good point, Paulina, and really starting to look and read the fundamentals. And this is the beauty of artificial intelligence and some of these big research tools we have at our fingertips, because now, before, it used to be a bait and switch, fearmonger, everyone would sell at the highs, and then they'd buy at the lows. And now we're starting to really, investigate behind companies, and it's really paying off. And I think it's going to be really healthy for the markets, and they're not going to act as they normally did in the past because of this. What do you think on that?
That was a mouthful, Mal. I'm not sure I got it all. I was wiping sand off my face because I was in the sand trap so much today.
Oh. I was in a sand trap on that earlier comment. I'm gonna have
you
to
were. I got that. No, it sounds like, from what I'm hearing, that so first of all, he probably hasn't touched an option of any subsequence, right, Paulina, in his portfolio, if he's value investing long term.
Yeah, I haven't seen any indication that he's kind of like a short term or trades any options. It's a hedge fund, and he has $7 billion in assets. So I would imagine that it's more of a long-term play on these companies, and he has very large stakes in these companies. So I think he's more invested for the long term.
Okay, cool. I don't know. I think I have to learn more about him because I don't think it's so broken as maybe the indication comes out. I'm not on that train yet. I don't think.
The only reason the market, and you tell us, Lex, the only reason the market really tanks is when everyone pulls out. So, and that only happens when we're in fear mode. What do you think about that, Lex?
Yeah, that's true. I think fear mode is listen, fear mode, it causes volatility, right? I'm not sure it necessarily causes up or down, but it can, so especially when people like my friend over here start bailing on stocks and don't believe them anymore. You need a catalyst. Yeah, you need a catalyst, is right. So the catalyst can be inflation, like it was for a while. It can be a geopolitical event like we're having now. So my feeling is one of the sleeper catalysts could be the Ukraine war, because we've kind of put it to bed a little bit because we're spending so much money to sort of contain it. But what if Putin decides to go into Poland or one of the NATO countries? All of a sudden, we can't be so passive anymore, and it could cause a ripple effect in the market, which causes the catalyst, right? And then people start bailing and running for the hills. Those sort of things.
And I'd be interested to see what your friend who's sitting next to you, Lex, says about that, because he's been on the front line. So I'd be interested. What does he think about the current war situation, and what does he think?
Wars are inflationary.
Wars are inflationary. He's speaking right now.
Absolutely.
And can you see my mouth moving when he speaks? I'm like a little ventriloquist thing.
This is great. Can we get him in the picture? Wars are inflationary.
He won't come on the camera. He's got compliance issues.
I know. And there's an absolute correlation between, inflation and the PE ratio on the S&P. And when inflation goes up, I think in 2022, we're at 9%, and the PE ratio took a dive. And then 1 year later, we dropped to 3%, and the S&P, PE ratio went back up again.
Yep.
So there is a direct correlation between geopolitics and the stock market. Absolutely. We know that.
Right.
But I'm interested.
Hold on a second. He has something to say, but it's going to be like he's Peter in the other room. So this guy named Peter, and he's not even really here, but he's saying things in the background.
All right, that's his code name.
While the market's waiting for the opportunity for the Fed to drop rates.
Right. While the market's waiting for the Fed to drop rates, the opportunity for the Fed to drop rates.
It appears as though inflation's picking back up.
All right.
And the catalyst could end up being a period where the Fed is. So he has to look at increasing instead of decreasing.
Right. All right. So his comment, you probably couldn't hear it, but his comment was that while we're anticipating inflation to kind of subside, what if it doesn't? Let's say, and it actually upticks some more, and we don't have the benefit of being able to lower interest rates. We might have to raise them again. Essentially, that could be another catalyst that causes another downdraft. And look at, quite frankly, you think about it, there's probably not a horrible chance that could happen. Now, probable versus possible, two different things. I get it. But it's not out of the realm of possibility here, right, for these things.
Okay.
No, you're not referring to Agenda 2030, are you, Lex? Did you just drop that? That both inflation is going to increase, rate hikes all at the same time for the great squeeze, the great final squeeze.
The final squeeze. No, but inflation it has ticked up a little bit again in the last 2 months. So again, we're in this. I think we're in this very difficult spot. And Paulina, I don't know how you feel about it, but that whole complex with the Fed and interest rates and inflation, that's not done yet. The geopolitical thing's a really important part, I think. What else that's out there?
Yeah, I think as your friend mentioned, obviously inflation, the data has been really sticky. It does appear that consumers are trying to adapt to the higher prices.
Yep.
We've seen the recent retail sales report. They're still spending. At the same time, employment data is coming in really strong. So this all suggests that the economy is doing well and not approaching a recession. But, it's really difficult to kind of see where the Fed is going to be taking rates next. It doesn't seem like they're in a position to cut anytime in 2024, even though in the beginning of the year, that was the narrative that investors were going with. We also got the recent GDP report, and it showed that the economy grew at a 2-year low. But at the same time, consumers are still spending. So that is kind of threatening to the economy. Like, are we in a stagflationary period? And what does that mean for the markets? I think there's a lot of challenging,
Right.
areas.
I
Those are
don't
good
think
points.
I don't think it's going away. I think inflation, when you introduce this amount of currency in the last few years,
Yeah.
when it's introduced, the guys who get it first spend it at its current valuation, but the second it circulates out into the world, it's debased. And so,
do you know what the Bahamian dollar is? It's
What?
always the U.S. dollar. Whatever the U.S. dollar is, the Bahamian dollar is. It's the most
Okay.
amazing thing. It sticks right to us. I said, hey, how much money do you get back in Bahamian dollars? He goes, the same amount you get back in American dollars. So terrific.
All right.
It's been like that
All
for 100 years. Okay, well, cool. All right, Paulina, thanks so much for coming on and talking about David Iron. Is it David? Did I say that right? David Einhorn?
Yeah.
You know him. I don't know. Maybe I don't. But that was interesting. I'm gonna kind of delve into this a little bit. I didn't know anything about him before the show, so thanks for the notes on that too. And I know you got to go, so you have a great weekend, and we'll talk to you next week.
Thank you.
On the Brew on Friday. So have a great one.
Thanks. Bye, guys.
Bye, Paulina.
Oh, hi, Mom.
Oh, hey, Lex. I am definitely shoving this point, but
I know.
I do think that standing outside, a friend of mine just got back from London, and there's been some demonstrations, but aside from any demonstrations, I think a trade could affect history.
Okay. Well,
What do you think about that?
you mean a trade? Like someone says, I'm going to sell or buy this? That sort of a trade?
But I'm talking trade upon trade upon trade upon trade.
I don't know. I think it depends. Like, the whole GameStop thing was very different, and that's another show. But and we know what happens. You and I have talked about this before with other folks. In a market, a macro market environment like a SPX, it's a $1 trillion notional sort of market, right?
Yeah.
And the market participants, when they get their option Greeks and all that stuff, and they're trading a lot of options, I mean, it's in the billions. Billions versus trillions are two different ballparks away,
Right.
So it's actually really small, relatively speaking, to how big that market is.
And options, I mean, the quantity of options being traded is eclipsing securities.
Oh yeah, I mean, I gotta tell you, that's the bigger note, I think. For folks who like to tune in here, is that the option market, it's got its fluctuations, obviously, but man, it has grown so much, so large, and I really believe that it's going to continue in that vein because people are becoming educated. They're watching these kind of shows.
Right.
They're learning more. They're trading more. The barrier to entry is so low.
Yes.
Look at how cheap it is to trade now.
Oh, yeah.
I mean, the folks over at Tradier have, commission-free trading for options and different plans like that. It's just,
and the new futures. Speaking of geopolitics and getting into that.
Yeah, that's coming out as well toward the end of May, we hope. But yeah, there's a smorgasbord of things to trade, and it's easy. You get a computer, like I'm on a computer right now. You are. You open your account, free to open them. You just get in there and do your thing. Now, I always caution people: make sure you understand what you're doing. Learn first. Don't just start throwing stuff against the wall. It's interesting because this is my analogy. I was in the casino last night, and I understand blackjack and craps, just the mathematics of it really well. And I'm watching this young couple next to me just playing allegedly for fun. Okay, I'm assuming, but they have no idea what they're doing, making every wrong play that you can imagine. Now, okay, if you just come in and say, I've got a couple $100, I don't care if I lose it. I just want to have a good time and laugh and giggle and have some drinks. Totally different. But if you're trying to really play that and try to do something with it, I would suggest you understand basic blackjack strategy, just like options. You have to understand basic option strategy and what can happen, and and what the effects are of doing this versus that. It's a curve that you have to kind of be involved in to learn it, right? And how much we preach about education in our business, right? So, and
listen, if options are eclipsing equities and the tail is wagging the dog, and the numbers of people jumping into trading is skyrocketing, then don't you think that the influence of the retail trader and options traders could affect the value of securities, and hence
Yeah, I think that's good. That's actually a good point, Mal. I like it. I think there's a possibility if there's another catalyst, okay, and I don't know where the catalyst comes in an individual security. It could come from anywhere. That there's a possibility in the less liquid names that market makers have to take option positions in, that if it's the catalyst causes it to start really rushing in one direction to the other, that it could accelerate upon itself because that market is so small, and you have these participants really pushing the stock around in an illiquid type environment. It could really move things.
So even until we get those numbers of Vivek Ramaswamy and his company Strive, he's combating some of these ESG initiatives, which is nice. And I think with AI and these big data engines that we have access to, and the low barriers of entry, as you mentioned, I think wars won't be so isolated in this decision making. I'm
gonna go have a boat drink on the boat.
Can you tell us where you are, by the way? We're all curious.
If I tell you, I might have to kill you. We're in I'm at the Atlantis in the Bahamas. You know that big crazy resort.
Yes.
It's one with the the big huge pinkish kind of building.
Right.
So that's why I'm with some of my buddies. We're playing a little golf and we're gambling and we're boating and fishing, trying to catch big fish.
So fun.
Have eluded us to this point.
So fun.
Yeah, so we're having a good time. We came over from Albany, which is in the Bahamas, a harbor in the Bahamas, and we moved our way over to the Atlantis for the last part. And then I'm going to the OIC in Asheville tomorrow to participate on a panel or two and participate on a podcast. And we're going to do some. I'm going to try to do some 15-minute videos. Hopefully, if you're available, you can join, and we'll try to grab some people from the OIC in the industry and chat for 10, 15 minutes at a clip. We'll do some shorties for down the road.
I'll try not to embarrass you, Lex.
No, you never do, Mal. Never do.
All right.
So,
thanks.
Sound good?
This is fun.
It was good. I appreciate it. This is going to be really interesting how this comes out.
Yeah, I know.
All right. That's a wrap. Ding, ding. Good to see you. And we'll talk next week.
Bye, Lex.
Bye.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.